What's going on, guys? I want to give you guys a little trade idea for tomorrow, especially if you guys are still looking to trade on this short holiday week. My name is D'Anthony with evolutiontraders.com. I make videos on technical analysis, kind of showing you guys supply and demand levels to help you guys make more money when it comes to day trading and scalping options and or shares. That stock that I'm going to be looking at here is Etsy, ticker symbol ETSY. Today, fantastic day, up about 3.5% and $4 on today's session. So we did close at 119.29, pretty much flat in the overall after hours. One thing that I do want to point out here, we kind of have this little bit of a double bottom here down at these lower Bollinger Bands, kind of resting at a medium price range of around 91 to around $95. Ever since we really reclaimed, okay, if you kind of look at this red line here, I know understand that my chart has a lot of supply and demand zones on it, but this red line here that I'm kind of drawing across is the 50-day moving average, a simple moving average here. You can see when we did on your charts, go to the daily time frame, look at November the 10th, as soon as we broke out of this consolidation here that we've been kind of sitting in on Etsy for the past month and a half. We got this nice breakout followed by a 1, 2, 3, 4-day run up. Now we did get rejected at the linear regression channel, but this is very, very healthy. For a breakout move, a 4-day move going from a price of over the 50-day moving average of 103 to 119 is a fantastic short-term swing. So keep in mind that when you're kind of looking for these swings and the market's doing what it's been doing pretty much all year, anytime we kind of reclaim that 50-day moving average or lose that 50-day moving average, we kind of go on a little bit of a cycle. Look at the last time here, we reclaimed it, we went on a 3-day run up, and when we lost it, we went on a 3-4-day downturn. So just kind of keep that in mind. Now, as we did come into the 10-day moving average here, this prior resistance going back to September as well as October here, look at this resistance that we had 2 times here a month apart. We came down, not only pulled into that, but bounced right off of this rising 10-day moving average. And if you look at where we closed today's channel, it is at yesterday's high. This is a very, very easy long position for an easy scalp, 119.42. Play that into this linear regression around 121.64. So you're going to get about $2 worth of a trade there if the market does continue to push higher. And that's a very, very easy trade. Now, if we do gap up tomorrow, there's a little bit of a different way to play that. Let's say, for example, we gap up into 121, 122. I would not recommend chasing that long right off the bell. What you're going to want to see is one of 2 things. You're going to want to see that new high off the gap up, and then you're going to want to see a little bit of a sell-off in that first 30 minutes to an hour's time. You're going to want to see bulls trap those shorts, go red to green, or take the stock from the gap up to red back to green through the new high over that linear regression, which should be anywhere between 121 and 122. Now, if we open down, I would give the market at least 30 minutes to an hour, hour and a half to trap those shorts and go red to green off the open. So if we do open anywhere between price of, I would say, 113 to around 117, definitely don't just jump in here because you could be looking at a little bit of a sell-off. Now, we do have FOMC and we do have some numbers coming out before the bell. So if we did decide to lose today's lows, the next hard support is going to be sitting right here around 110. Now, I don't expect the market to move 10 points down, but crazier things have happened, especially on a short week when there's not a lot of volume in the market. So I'm just kind of giving you my perspective and my bias. Really will not be looking for the short position tomorrow if we do gap down. Mainly what I'm looking for is some sort of red open, a flat open, or a slightly green open. And then I'm just looking to take out today's highs and kind of take this up for $1.50, $2 on the move. Now, definitely keep in mind that when you are trading multiple contracts or multiple lots, or depending on how many shares that you're carrying, if you do get to that 121, 122 spot, you're going to make sure to want to lock in some profits, but you're going to want to hold a runner, okay? If you don't understand what holding a runner is, that means that, let's say, for example, I take 10 options contracts on Etsy. Maybe I want to close in and lock in, 5, 7 of those contracts, lock in those profits, and then hold those remaining 2, 3 contracts until break even, which would still put me green on the overall trade, or until you get stopped out. So you're going to get stopped out at break even, or you're going to continue to ride those options until they put in a new high. Now, if they never stop you out, you've got 1 trading day left. And if you're trading 0 days till, weekly expirations, you're only going to have a very, very short day on Friday. So I would look to sell out at somewhere close to the open on Friday's session. If you do play contracts that are dated, 2-3 weeks out, then you could definitely hold those runners. And as long as we are holding the 5-day moving average, you would continue to hold those runners on a daily time frame. I hope this trade idea helps. If it does and you're able to make some money and it pans out, make sure to come back and leave me a comment. Also, check out my website at evolutiontraders.com. My name is D. Anthony. Join the Discord. That link is down in the description box below, and I will see you guys all in the next video.